Italy is too big to bail out. You and I both know that the markets have got the jitters.
The problem is going to be Germany, not Italy.
But you can't say that. You can't predict that.
Oh,
the point about self-government.
No, nice.
No.
I can.
What's your view on the euro falling further from here? Welcome to the Capital.com debate. Today we're debating the future of the euro. The single currency has been around for the past 2 decades, and as it's currently falling against the dollar and trading around parity, we're asking, could this be the beginning of the end for the euro? Could the debt levels and growth problems of southern European countries doom the single currency? Or actually, has it been a big success story? Our guests today to debate this topic are Nigel Farage and Daniel Lacalle. Nigel, of course, is a staunch Eurosceptic. Some would say that as the former leader of UKIP, he was the man behind Brexit. He's a political commentator, former politician, but for many years worked as a commodities trader. He appears nightly on his television show on GB News, and he has opposed the euro as a single currency right from the start. Daniel is a Spanish economist with an economics PhD. He's the chief economist at Tresis, that's one of Spain's biggest wealth management firms, where he works as a fund manager. As an economic liberal, Daniel holds a positive view on the euro. He believes it's better for people in countries such as Spain, Italy or Greece to be earning in a strong currency rather than a weaker one, and sees the euro as a success story. Nigel and Daniel are going to be debating these key points today. Now, it should be made clear at this point that the two guests are not connected with Capital.com, and any views that they have are personal to them and are not representative of Capital.com, nor do their views constitute any advice. Okay, let's get into it. First off, we're going to give both guests 90 seconds to make their case. Nigel, if I could start with you first. In a minute and a half, what is your position on how the euro project is going?
Well, you have to look at how it started and why it started and what it was for. And it was an economic and monetary union that was put together, put upon the peoples of Europe. They weren't asked whether they wanted it. Oh, sorry, I'm wrong. 2 countries were, and they both rejected it in a referendum. And the thinking was that you put in place an economic and monetary union, and as sure as night follows day, a full political union would follow. That was what they thought. I was there in Brussels when this thing was launched. And the truth of it is that political union is perhaps further away right now than it's been for a long time. The east and west of Europe bitterly split over cultural issues. The north and south of Europe, of course, terribly split over economic issues. And I think right now is a great moment to have this debate, not just because the euro has sunk below parity against the dollar. I suspect that's got more to do with energy and the fact that Europe has pursued an idiotic policy than it does about whether the euro survives. But, you know, with a very important set of elections coming up in Italy in a few weeks' time, the markets are now ringing alarm bells. And in the end, it is politics that will break the euro. And it's coming. Whether it's coming this year or in 2 or 3 years' time, I don't know.
Okay, Nigel, I think you made your position clear there. Now, Daniel, over to you. Same question to you. What is your position on how the euro project is going?
What we must understand is not necessarily whether the euro is a perfect project, but whether it's an acceptable project for the countries involved. And for that, we need to understand what a currency is. A currency must be a reserve of value, a unit of measure, and a generalized mean of payment. The problem that the European Union countries had prior to the euro, Spain, Portugal, Greece, Italy, etc., was that they did not have strong currencies whatsoever. They had extremely poor currencies. And one of the problems was that they constantly disguised their fundamental problems by the horrible measure of competitive devaluations, which ended up making everyone poorer, which is the Argentine way. So The euro is not a perfect project, but it is certainly a success because in 2022, we're still talking about it. And yes, it's fallen below parity, but it is still a world reserve currency that is used in 60% of global transactions, according to the BIS. And furthermore, that it's a much better alternative than the peseta, the drachma, the lira, or the escudo.
We've seen the euro lose 18% of its value against the US dollar over the past year and a half. That's a sizable fall for a major world currency, nearly 20% in a year and a half. Nigel, for you, for the euro to crash further, what do you think would need to happen?
Well, I think it probably will anyway. And I suspect the pound's in the same boat. If you look at what's going on in economics and in global politics, it's all down to one word: energy. The intelligent countries decided they'd be self-sufficient. Those that followed the goddess Greta Thunberg, all hail, and decided, no, we won't produce our own energy because that won't allow us to get to net zero. We'll just buy it off that nice Mr. Putin. So I suspect that those currency moves are going to continue. I really, really do. And I do fear that the really big risk in the world economy at the moment is that gas prices, already at record levels, could go sharply higher this winter. I can't see Putin wanting to be nice to the West in any way at all. But I thought the interesting point Daniel made about the euro and the interesting debate was the use of the word acceptable. Now, you're quite right. Italy, where I did a lot of business when I had a proper job before politics, competitive devaluations went on. And, long term, that's not a great way to manage things. But I've always believed that floating currencies are a bit like golf handicaps. They reflect whether you're going through an up period or going through a down period. I'll tell you what's unacceptable. When you're trapped inside a currency that you're not suited to, you can't have a competitive devaluation. So you, as Milton Friedman predicted shortly before he died, you devalue the entirety of the country. And to see Greece, which was the birthplace, of course, of the very concept of democracy, reduced to being under the control of the Troika, who even told them what their tax rates could be, told them what they were allowed to spend on pensions, on the health service, to see a country stripped of any ability through the ballot box to determine their own future, but to save the great political project, the country has gone through a 25% devaluation of living standards. On balance, I think I prefer floating systems that allow competitive devaluations to something as monstrous as has happened to Greece.
We're going to come actually back to these the southern European countries a bit later on. But Daniel, what's your view on the euro falling further from here? Do you think we have to just take it for granted? We're going to see further euro weakness? What would be the catalyst? Or actually, could the worst be behind us?
I think it's very likely that we see a further depreciation of the euro relative to the US dollar. The energy element is very important, but there's also an important element, which is the China slowdown, which is making the trade surplus of the eurozone be significantly lower than it would be anyhow because of the massive increase in imports of energy. So the thing that kept the euro strong relative to the US dollar and certainly above parity was obviously a massive trade surplus added to the undeniable support of Germany as a strong currency. Somebody, when I was in FX trading, said to me that the euro was the Deutschmark with a little bit of meat and potatoes in the side with the other currencies, French franc and the others. So I think obviously the weakness of Germany, the trade surplus falling to a massive trade deficit, and the energy element, which I completely agree is crucial, are elements that are going to continue to keep the euro weak relative to the US dollar, obviously.
Why do you think the eurozone has had low growth relative to, let's say, the US and UK, countries that obviously don't use the euro? Why is the European economy lagged behind?
It's easy to blame it on the currency. We tend to do that quite frequently in economics. But the reality is that the eurozone model, the economic model, is predicated on one fundamental pillar, which is public spending. Public spending is untouchable, as Nigel knows. It's not only just untouchable, but it dictates everything else. So the so-called social support of the eurozone becomes also a burden in terms of competitiveness. So the problem of the European Union is that instead of being a system in which the positive things about the monetary union and the positive things about trading together, it's a minimum common denominator system in which everyone is being brought down to an average instead of taking the best out of each individual economy. And that is obviously a burden on growth, and it's certainly a burden because the European Union has completely lost the technological battle globally. It has not even presented itself to it.
Okay, Nigel, there's some quite critical points there.
Yeah, no, there were.
And what do you think? Why is it lagging behind the European economy? Would you agree with that?
Let's be frank, the euro's been fabulous for the Germans. Absolutely wonderful, because basically they've had a much lower currency. Most of their surplus in the last few years has been selling to other European countries. I mean, it's been great for the Germans. If you want to live in a German-dominated Europe, the euro is just terrific. It's also the economic model driving growth is, of course, one of big businesses. The whole system, the whole governance system centred in Brussels is all about pleasing the giant multinationals. And you've put together, a rule book, a framework, a legality that suits big companies with huge corporate departments of law and compliance, and is an absolute disaster zone for genuine entrepreneurship and for real capitalism. I've got to tell you, I wouldn't even consider investing in a French company. I wouldn't employ any French man or any French woman. Such is the mass of employee legislation. And when you get that cloying effect of an over-regulated economy, as I say, great for the existing people, because it means the barriers to entry for new challengers become very, very difficult. And I think that's part of the reason why technologically we've fallen behind it. I'm making the case for old-style free market economics, that I think having differences in taxation rates, differences in legislation, differences, competitive differences between countries living on the same landmass, I think that, you may say it's inefficient, but in the end, actually, I think competition drives innovation, competition drives success, and if it's not an over-regulated model, that competition drives genuine entrepreneurship as people see arbitrage differences between countries. And I think we've replaced that with a sort of right-wing form of communism. It's almost incredible to think that it is the European Commission that nobody can vote for, that nobody can remove, that have the sole right to propose legislation and the sole right to propose repeal of legislation. We've moved the regulations and rules by which businesses operate and people do their jobs, we've moved it beyond democracy, beyond the people. And I think it's a fundamental mistake. And I think in the end, it'll be its undoing.
Daniel, is there anything you'd like to come back on there from what Nigel said?
I think it's important to understand the history of each of the European economies and the ones that have joined within the European Union. I completely understand why a Swiss citizen or a UK citizen could be suspicious or not particularly interested in joining the single currency or in having a body like the European Commission that oversees some parts of legislation. I can understand that. But I don't understand it from the perspective of Spain or Greece or Portugal or Italy or France, to be fairly honest, because the economic history of these countries outside of the European Union is that of the same burdens that Nigel was mentioning, but even worse, prior. And this is an important factor, is that when we look at legislation, regulation, all of these things, we can debate about the merits of one, the good things about another, etc. But what I like to compare them is what they were prior to the European Union. In fact, as the Spanish and I've worked recently with Italy and with Greece, I can understand why there is such a high level of support for what the European Commission says, even though numerous of those things may be debatable and certainly incorrect. It is that most citizens know that it would be worse if the politicians that we have in each of our countries would be completely in charge. So the European Union, for many countries, is acting actually as a defense mechanism against worse policies. And I understand that some countries don't need that because they think that, or they're confident about the independence of the institutions, etc., etc., etc. But I personally, I've always said it, that if today in Spain we did not have the European Union, the policies would be those of Argentina.
But you can't say that. You can't predict that.
Oh,
the point about self-government.
No.
You cannot predict the political future.
Not of the politics that I like, not of the politics that I
You cannot predict the future
of
politics in any country.
Political parties that are in the political landscape today. I can.
Countries can turn around. Countries can change. Politics can change radically. You know, I grew up in a very, very socialist country, all right? And a level of socialism and state control in the United Kingdom that had unanimity of support and had done for a very long time. Top rate income tax, over £38,000 a year in 1979 was 83%. All right? Just one little example. Vast swathes of the country were nationalised. You couldn't leave the country with more than £50 in cash. And everyone said, it'll never change, Britain's finished. And then it did change. A woman came along and turned it all around. And you can like what she did or dislike what she did. The argument that our politicians at a national level are so bad, so useless, that we need to give control away to a group of people we can't vote for and we can't remove, well, I would argue, of course, that it's the language of defeatism. But actually, I've heard those arguments here. I did these debates, Daniel, in 1998, 99, 2000, 2001. Should we join the euro? And the classic one was, we're not good enough to run our own country. Let somebody else do it. Now, from a British perspective, I don't buy that. But I would also point this out to you. You know, where this will turn, where either you will be proved right or I will be proved right over the next few years, comes down to Italy. All right? Italy is the big one. Italy is too big to bail out. You and I both know that the markets have got the jitters. The 10-year bond spreads have widened quite considerably again over the course of the last couple of months. There's a big election coming up in September. You know, it is not impossible that Italy is on the verge of going through a political metamorphosis away from what they've supported for decade after decade. You can never, ever predict the politics of the future. But I genuinely believe that the success or failure of the euro rests on that country.
10 years ago, we had the combined debt of Portugal, Ireland, Greece and Spain threatened the euro. And today, as Nigel alluded to then, Italy's government debt stands at something like 2.5 trillion euros, which, so this is Italy's debt, is currently larger than the combined debt of those 4 other countries. Daniel, do you think the current debt crisis in Italy could be the contributing factor that sinks the euro?
It can certainly be a risk. Absolutely. It can certainly be a risk. The problem now is that the European Union, the eurozone, constructed a model to get out of crisis that is a bull market model. As both of us have worked in financial markets, we can understand. It's a bull market model based on the idea that as long as you lower rates and increase money supply, there's not going to be any issue. The problem is that those tools have already been exhausted, and that now there's not an easy option for Italy. So the option for Italy is unfortunately not very popular, and it's certainly not very popular among Italian politicians themselves, which is that they need to go back to a level of openness of the economy that they're not willing, and it's not even popular.
But if it comes to more bailouts being needed, which I'm certain there will be, you know, I've got to tell you, the taxpayers of the Netherlands and countries like that are not feeling too enamoured about that prospect, particularly as we go into, possibly quite a long recession. The ECB itself, of course, isn't fully established as lender of the last resort. I don't know how this plays out in the end, but I can see a massive Italian default coming. I mean, I think in terms of what it'll do to the banking system, it'll dwarf the threats we saw back in 2008. But there just comes a point when people don't want to live under servitude. And Daniel doesn't get this point. But there is such a thing as the nation state. There is such a thing as an identity. There is such a thing as we belong to this tribe. And we're not going to be told what we can do by somewhere else and watch ourselves get poorer and poorer. The Greeks put up with it. I mean, I really thought there'd be a colonel with a big moustache and a funny hat that would turn up, and take over in Greece. It didn't happen. But I think in Italy, it is going to happen at some point in time. The European Union and the euro is a globalist model. And provided people are happy to give up national identity, to swear allegiance to some wretched flag, to adopt a new anthem, and to accept they themselves, through their vote, can't change their future. If that belief in nation state has gone, then the euro will succeed. But ultimately, I think mankind, ever since the beginning of time, has never willingly given up the right to govern themselves. And I'm all for a Europe of trade. I'm all for a Europe of cooperation. I'm all for a Europe with sensible minimum standards, police cooperation. I want the UK to be in a Europe that does all of those things. But I think when you go to an economic and monetary union, and logically for it to work, that has to be a full political union. And there is no desire for that full political union. In the end, you hit a brick wall.
Daniel, you're joining us here today from Spain. What would you say to Nigel's take that Spaniards have effectively given up their national identity by being part of the eurozone?
It is not that way. It is not that way. I understand that there is a perception that everything is dictated by Brussels, but no, I don't think that is the case. I think that the European Union has proven to be rather the opposite, a lot more flexible. And coming back to the Greek crisis and the impoverishment of the Greek population, or the Italian population, or the Spanish population, for that matter, the German or the French, it is. History tells us, not only history, but what the people that went to power were telling us, is that the solutions that they would have undertaken would have been massive impoverishment. There is a problem when there is a society that has been built on the view that every unit of spending is essential and can only grow. The moment that you build that, you're always going to make everyone poorer through inflation and through the devaluation, no matter what. The reason why I support the eurozone and the European Union is that without taking away any of the challenges, and obviously if anybody wants to leave, fantastic. This is not the Hotel California, hopefully. But the point that I'm trying to make is that the eurozone merits are positive. The eurozone negatives can be dealt with.
Now, Daniel, we say all that though about having a single currency is great, but it's already down nearly 20% over the last year and a half. Yeah. What if it drops another 20% in the next year and a half? I mean, do you think we could see, because of all these issues like Italy, we could see the euro absolutely crater in value?
Absolutely. And that's why the ECB has to follow its mandate, which is not which is a big problem. We agree on all those things. Absolutely. That is a big risk. You think about this. In 2020, the average deficit spending of the Southern European countries was between 7 to 10.5% of GDP. They would have monetized everything and destroyed the currency, be it a right-wing or a left-wing government, and they would have blamed inflation on businesses or on whatever, as they do in Latin America. I do business constantly in Latin America. It's always the same problem. So the reason, and I come back to this fundamental point, the strength and the use of a currency is dictated by the strength and the independence of its institutions. And I can understand perfectly the rationale behind the UK not to join the euro, or the Swiss franc not to join the euro. I can understand, but the point I'm trying to make is the reason why Argentina should have the US dollar and the reason why Ecuador has it.
Well, I don't think we should compare the ancient countries of Europe to Ecuador, South America, and various banana republics around the world. I mean, we're talking about first world nations, and first world nations have their own currencies, have their own central banks, set their own interest rates, determine their own futures. It's almost the definition of a first world nation.
Well, I understand that point, but it's the definition of a first world nation, but first world countries have seen 27 fiat currencies disappear. Not just the European Union ones, by the way. And the important thing is, absolutely, that one of the positive things that one can achieve by being a first world nation is to have a currency that the rest of the world trusts as a reserve. Unfortunately, as first world nations, what I know, and we know both, is that neither the peseta, the lira, the drachma, or the escudo were reserve currencies that were trusted globally. I did foreign exchange for 10 years. The only thing we did was to buy Deutschmarks all the time. At the end of the day, what we were is, in effect, doing a disguised euro. The problem, we can debate this endlessly, but to think that Greece would have dealt with its crisis by not completely demolishing the savings and the real wages of the citizens if they had the drachma is negated by the reality of what Mr. Varoufakis, for example, was defending.
He said if Greece had had competitive devaluation, given the dire economic straits it was in, I think it's quite likely that Greece would have seen, if it had bust out of the euro, had this big devaluation, I think it quite likely would have seen big foreign direct investment, particularly manufacturing, things like that. I mean, look at Iceland. Iceland, an independent country, and I remember saying to the European Parliament in 2008-9, who would you rather be, Iceland or Ireland? And of course, they all laughed at me. I mean, they always laughed at me. But actually, Iceland, with its own floating currency, control of its interest rates, once it had been through that economic winter, was very quickly back on the road to recovery. And to think that one currency or one set of macroeconomic rules suit economies and cultures, frankly, as diverse as Germany and Greece, it's for the birds. I mean, this was never, ever going to work. It was always going to be in the interests, frankly, of Germany, to the detriment of pretty much everybody else. And I believe that's what we're seeing.
But I don't think that the Germans are particularly happy.
Well, no, you're right. It's not working for anyone. But it did for them. It gave them a cheap currency. It helped them have a Deutschmark, effectively, that was 15 to 20% lower for most of the last 20 years.
We've covered so far today the demise of the euro over the last year and a half. We've looked at reasons why the European economy has lagged behind the likes of the UK and the US. Daniel, the next question to you, first of all, if we were going to go for a eurozone Armageddon situation where we have complete meltdown, what do you think are the fundamental factors that could cause that?
What could cause a eurozone meltdown? I would say that if the euro loses its credibility as a world reserve currency, think about this. For many years, Many central banks have been exchanging part of their reserves in US dollars to euros because of its fundamental strength and the very clear mandate of the ECB. If the ECB turns political and goes aggressively to destroy the purchasing power of the euro, come back to the point that we have been talking about all the time, that would be certainly a big problem. I always make a musical analogy. The Beatles didn't split because of Ringo Starr. The Beatles split because of Paul McCartney. The problem is going to be Germany, not Italy. I'm sorry to make the analogy. Because it's Germany that has done the following agreement with the rest of the eurozone, which is we will support financially, we will give strength to the currency, and we will give strength to the fabric of the institutional group in the eurozone in exchange for low inflation. But it's 8.5%. And it's going to likely go to double digit by the end of the year. And the Germans are not accepting an argument that is frequently told in Spain and Italy, etc., that inflation has nothing to do with monetary policy, because they know it's bullshit, to be fairly honest. Inflation in Switzerland is 3.4%. So it's going to be about Germany, and it's going to be about the credibility of the ECB.
Nigel, just picking up on that, over to you. Do you think that the euro and the European Union as an economic area could ever survive without Germany?
I think Daniel's point's absolutely fascinating. You know, what he's basically saying is that when push comes to shove, the Germans will make a nationalist choice as opposed to a globalist choice. He may well be right. He may well be right. Maybe in the end that's what does it. But it sort of rather goes back to my previous conversation. That in the end, people make decisions about a collective group that they genuinely feel a part of, not some sort of bizarre idea of a new European country with a flag and an anthem that nobody's ever asked for or ever really wanted. So you may be right, Daniel. You know, it may well be the Germans just say enough is enough. Within the Target 2 system, there are vast amounts of money between central banks that are owed to Germany. I mean, we're talking trillions here. And I guess that's the big danger for the world economy. The big danger for the world economy is if it's the other way round and then Italy just rebels and says, right, we're getting out of this, we're bringing back our own currency, we're reneging on all the debts. You know, that would be, as I said earlier, or hinted earlier, that would be not just the end of the eurozone and the European Union, it would pose a really serious threat to the global banking system.
Nigel, Daniel, thank you both very much for joining us for this debate. Now, as stated at the top, our two guests today are not connected with Capital.com, and any views that they have aired during the debate are personal to them and are not representative of Capital.com, nor do their views constitute any advice. Thanks for watching, and don't forget to subscribe to our channel to stay alerted to all our latest videos, from regular chart analysis on the markets to macroeconomic explainers on the key financial topics of the day.